All right, here we are. Happy Monday, everyone. Thank you so much for joining as we have a couple of people trickle in here. Wanted just to go over some quick house rules, folks. One thing that we definitely will not be doing today is talking about anything that is specifically related to financial advice. This is a safe space, so if it's probably a little bit too controversial or spicy for a family dinner during the holidays, we will avoid that here. And last but not least, all the opinions that are shared are of our own and do not necessarily represent the organization that we work for. So, without further ado, I'd like to welcome Sean to the show. How's it going today, Sean?
Thanks a lot, Trevor. Great to be here, and happy holiday.
Likewise, thank you, thank you. Well, let's get into it. This is a conversation that I've been looking forward to for quite some time, and let's just give folks that are joining in here, and for those that will be tuning in later when we have the full episode uploaded, give us a 30-second minute elevator pitch about who you are and what you're all up to.
Great. Um, Thanks again for the opportunity. My name is Sean. I'm the CEO and founder of Greengage. We're a Web3 fintech, and what that means essentially is we're not a bank, but we offer banking services via e-money accounts that are crypto friendly. So we can handle dollar, euro, sterling, etc., but for crypto companies and individuals. Um, and in addition, we offer lending, but again, as a platform. So we're not doing fractional reserve lending. We offer loans through partners. Recently, we just announced a collaboration with Coinbase to tokenize private credit for SMEs.
Fantastic. I love that. Well, thank you so much. That was short and sweet. And let's kind of get into it. I mean, you have an illustrious career here, and we're going to talk about the origins of that. But really, how I want to start off this conversation is what was the first thing that really sparked your interest in blockchain technology? And was there like a defining moment or insight that really pulled you more from the TradFi to wanting to be interested in the crypto space?
Yeah, I think we can all remember the day where we kind of got the bug, if you will. I was working at, for various reasons, the first bank in the world that offered clients access to crypto, which was called Falcon, and it was a bank fully owned by Mubadala, one of the Abu Dhabi sovereign wealth funds. Um, and I was at the time the interim CEO and COO of the London office of the bank. And in seeing clients that were keen to buy Bitcoin, for example, and having more of my own background in say the plumbing around how does a bank work, I got the spark of thinking if we see this more kind of exciting asset class start to impact the processes and procedures of how financial transactions can actually happen.
Hmm.
That for me was the most exciting thing, and I appreciate the headlines, and obviously Bitcoin being the price that it is now is very exciting for everyone. But it was always about for me how does this actually make money move more efficiently, and how do we get lending going and get those two things that banking is all about, liquidity and the pricing of risk. How do we get them happening at a level that's fair and quicker?
Hmm. And what are some of the most significant, I would say, benefits of blockchain? What it can bring to finance that's was missing before, and where do you see really this technology being able to kind of fill in some of the gaps of traditional financial systems as well?
For me, it's all about the inefficiencies in the way that things are currently done, and a lot of the setup of the current financial system is essentially still post Bretton Woods. So we're thinking of some of the movement of money, for example, happening in a way that's still thinking about money almost in a paper way. Um, and money and credit are no longer uh, paper based, it's fully digital. And we see that in the front end with a lot of the apps and the interfaces being it's seemingly entirely digital. Fintech has made that revolution um, quite clear. But the plumbing in the back end of the traditional system is still pretty old school. And so the two killer apps that we see as the interaction between blockchain and finance first are with liquidity, um, with payments, stablecoins. And stablecoins, if you look at the overall dollar flow of roughly 3 trillion US daily of movements of funds across border or domestically, about 2% of that flow now is happening on stablecoins,
Mm.
which is amazing. Um, and that innovation allows for much faster settlement of monies. But the key thing is no longer kind of M1, M2. It's the speed of transfer, so the velocity of money, which has materially changed, and that's because of the efficiency of blockchain.
And can you
The
just,
other killer app
yeah,
is debt, and I
no,
can park that for a second because you've got a question.
mm-hmm. No, I was just thinking too, I mean, what are the overall, and just kind of help us to understand that may not be in the industry about some of the cost savings, and you spoke about inefficiencies. So with things like stable coins and just this technology in general, what are just kind of some rough estimates of like the overall cost savings that businesses can experience by having access to money moving quicker?
So it depends where you sit on the trade. And I'll give you one very clear example, and then I'll talk to probably a little bit one that's more prosaic, if you will. But
Yeah.
the, the clearest is if you send money cross border. So if you're thinking of a transfer of, say, $1 from the US to Latin America or Africa or Asia or even Europe, what happens is something called Swift, which is a messaging language, essentially, takes that dollar and allows different intermediaries to pass that dollar to its final recipient bank. And that can take days. So in Europe, for example, to send money from Nigeria to the UK can take up to 5 days for it to
Mm.
actually. And when you're thinking about stablecoins, it essentially happens instantaneously. And it can be that same dollar, obviously a virtual dollar, but fully backed by a dollar. And that movement of money real time can save hugely in, for example, FX costs, but also volatility. And the time value means that if you think of that example of Nigeria, that currency, the naira locally, is quite volatile.
Yeah.
And so if you're looking to do cross-border trade, you need to hedge that risk to make sure that the end result, the recipient, actually receives that money at the timestamp of that particular trade. If it's domestic, say it's US, it's less of an issue, but there still is an issue between banks in that they need to hold sufficient capital to make sure that they receive, at the end of the day, the net settlement of the actual receipt of dollars. So it's less of a kind of clear cut 5 day wait, but you still have to hold on your balance sheet risk capital for counterparties. And by making it instantaneous settlement, you don't need to worry about something like delivery versus payment in the capital markets. You can have immediate receipt of funds, and then that shifts the kind of nature of how you think about money.
I love that. It really is fantastic and fascinating how this is all coming to fruition. So, it's just changing so quickly. And one of the things that I was just curious about was since you've been in this space so far, what's kind of been the biggest surprise for you since you transitioned here? And whether that's good or challenging or just something that may be unexpected, what's something that's a lesson that's been taught to you that you would like to share with others?
I think I think there's two things. One, I didn't see stablecoins getting adopted as quickly by
Hmm.
real businesses, um, and that's exciting to see. It's more in the cross-border case, admittedly, but it's something that's for me the first crossover between digital and the real world that's happened at scale.
Yeah.
Um, and the other surprise is for the bit that we're really keen on, the lending side. I've been talking about this for years. How digitization of debt can cut costs. You can reduce the barrier to entry for potentially capital markets activities for middle-sized companies to raise money wholesale. This has taken a lot longer than I would have hoped, and there's some projects that were doing some really innovative things early that unfortunately no longer can sustain as a business, so they've left the market. But we're hoping now, particularly with stablecoins having taken off, that this is a good time for us to look at lending as well.
Yeah, yeah. I think so as well. And I think that you're more focused, correct me if I'm wrong, on these smaller to medium-sized businesses, right? So how do you see, and you just kind of alluded to this a bit, but how do you see blockchain being able to be transformative for these type of businesses that are typically overlooked by traditional banks?
For me, it's about leveling the playing field. So we have a banking system which has changed since the global financial crisis. And banks have very rightly kind of risked off their balance sheets, which means they're taking less risk.
Mm.
So if they're looking at lending, maybe there's a mortgage book that they'll focus on. If they do lending to corporates, it'll be typically to the big guys because they know that they're credit rated, that they know that they can get those funds back. But the middle ground, the small and medium sized businesses have suffered, um, particularly in the UK. And I can't talk to the US statistics as well, but um, banks are lending less in real terms today than they were 10 years ago to SMEs. And that's a real hit on the economy. Obviously, this is where productivity happens, where growth really comes from innovative smaller businesses. And what we're trying to see happen with the efficiencies that blockchain can open up is the reduction in issuance costs. And there's two types of savings we're estimating. These very rough figures, but essentially through credit creation, by structuring and packaging loans. If you can think of smart contract based loans or private credit as a way to make the machinery change versus the old paper based system, we think the middle and back office costs for issuing debt can be reduced by, say, 0.5%. And when you multiply that by the total gap in SME lending in the UK, again, I know the figure of £22 billion sterling, according to the Bank of England, and you think of just lowering the cost of lending by that small 0.5% mark, that's a big saving that can maybe open up new capital to come into lending to small businesses. The other big saving we think is probably even bigger than 0.5%, and that's by reducing the middlemen. So we have lots of steps between an ultimate borrower and an ultimate lender today in not just the capital markets, but also the private credit markets. And by taking away those middlemen, by having the data set be discoverable at a more granular level, potentially to the ultimate lender. And by here, I'm talking about, for example, not just credit funds, but insurance companies, where a lot of the risk is transferred from the banking system all the way down to asset management firms or even sovereigns. We think if we can get those bits of debt packaged in a way that they're intelligible and interrogatable for the big boys,
Mm.
that we actually get a lot more money coming out from the wholesale markets into the small guys, and that's where our focus is.
That's fantastic. And we're talking about stable coins a bit here, and a lot of people have considered stable coins to kind of be like the Trojan horse of crypto, if you will, right? So you've talked about banks, the kind of evolution over the last few years, but do you ever see a point where banks will that were once highly opposed to crypto will ever want to custody crypto when we get through some form of regulation that's acceptable for the world?
Yeah, and I think we're already seeing that. I mean, sometimes they use different brand names, but Zodia is part of Standard Chartered. Komainu works as part of Nomura. Um, we have JP Morgan very clearly doing its Onyx program. I think these are natural evolutions for banks to look at the movement of the plumbing. For us specifically, I mean, we're initially I had wanted to get a full banking license for Greengage. I'm kind of happy I don't now, but that's more a process of discovery and kind of pain. But um, the way we see traditional banks is almost like tied agents, where they have some fantastic things. They've got regulatory permissions, they've got great address book, but they're effectively limited by the size of their own balance sheet.
Hmm.
Um, and what we see Web3 opening up is kind of a flip of that model, where banks are um, just part of a broader story of where a firm like us can act almost like a Sherpa to help our clients find multiple balance sheets, not just traditional banking, but also digital. So our job is to think of the world as our balance sheet.
I like that. You know, in an industry that, and we chatted about this a bit, in our initial conversation, but in an industry that swings between a lot of hype and skepticism, how do you personally stay grounded, and how do you really kind of handle the emotional highs and low that come with just the volatility of our space and the media narratives as well?
So I'm married, and I made a promise to my partner that I wouldn't I'm long crypto through Greengage. That's where most of my wealth sits. So I actually don't hold um, much crypto personally. Otherwise, I think you can't have too many eggs in one basket. So personally, I'm kind of that's my one doffing the cap to de-risking. But I'm definitely risk on as an entrepreneur, and I think yes, the speculative side of the market's always changed, and I've been in this for a long time now. So we've seen the rise of NFTs, the the rise of meme coins, uh, altcoins. I mean, all these things. I actually think it's a lot of fun, and I appreciate that a lot of people have lost their shirt, and that's not great. And I'm all for consumer protections and education. But I do think that process of education, for me personally, just getting my head around things and trying things, is very helpful uh, to achieving what we're doing at Greengage. And what I'm trying to do is, as I mentioned, be an intermediary, which I think there still is a place in a Web3 future, but a very thin layer where we have to know what we're talking about, but we need to work with the both. We're aiming to work with the good, but we have to be aware of the bad in innovation to help our clients steer clear of it.
Yeah, that's very true. You know, a lot of these things too, it may start one way, technology, and it can be morphed or adapted in a different way for sure. And the kind of next question I wanted to shift a little bit to is what's something that may a unique value or element within your company or culture that people might find surprising? I want to shift it a little bit more to Green Gauge and learn a little bit more about the culture there and really what makes your team special.
You're always hopeful that your culture is different. I've been in banking long enough to try to find a few characters that I can kind of pin my flag in the sand and say I want us to be like them. I've always been a fan of Sigmund Warburg, who's a bit who's not around anymore, but he's been somebody who I think combines the best of not just the movement of ones and zeros, but also a combination of a broader story, including history and culture, aesthetics. This doesn't work very well in the modern banking world. I can't imagine many people at big banks thinking about their place in history, but I think for us, we're trying to think because we are in a pivotal moment in history. How can we? I doubt we can influence the outcome, but how can we at least be part of that? And so typically the team we're looking for people who are intellectually curious, who read, who want to listen, as opposed to just classic pitch style banking, where we have a product and we sell it.
And do you feel like a lot of these banks are, you know, kind of open to the idea of this, or were they a bit more adversarial, you know, in the last few years, and as you mentioned, kind of coming around the corner and maybe adopting this a little bit more? And you know, a lot of people have these negative opinions about the banks. Do you see there ever being like a happy medium?
Yeah, I think we're actually moving towards it. I mean, I see us almost as a firm, a Web3 gateway model for potentially a bank to work with. We see banks as great origination partners. They have relationships, they've got data to a large extent. What they need is a culture where they can understand the risks in the new stuff, but be able to work with them. And I think to a large extent, regulation has been very difficult
Hmm.
for banks to play, not just in a sandbox environment, but with a real movement of money. And I'm hopeful that that is actually changing. Obviously, the wind has shifted in the US slightly, for better or worse, but it seems that when the dust settles, there will be not just these initial movers of banks that I've mentioned, but a broader based collection of banks. And I think the ETFs have been a great pivot just for de-risking, given the nature of the BlackRocks and Fidelities being at the fore. Reputationally, people can no longer just write the asset class as kind of a Ponzi scheme. It's now a proper asset class.
Yeah.
Um, and the underlying technology for me is the bigger story, but the asset class has opened up the door for that story to be told.
Indeed. And you know, you mentioned this a little bit, but what's been your experience with the regulatory landscape so far? And do you think that current trends in regulation are ultimately, beneficial? And where are some other areas that you see potential like challenges with this?
So I'm not an expert, and I can't kind of say I am, but I am fascinated to look at the number of unicorns in our industry, and where they're situated, and that's kind of a proxy perhaps for where firms feel comfortable to grow and can get the capital to grow and have the proper regulatory environment to scale. And the US is by far the largest home of unicorns. There's over 100 unicorns in the crypto Web3 space globally. And the patchwork of regulations in the US, well, a little bit complex for us to kind of get our heads around, is has allowed for firms to grow. And then perhaps I appreciate this kind of regulation through litigation approach. Once the firms are big enough, they can still survive when they get into that friction point, if it happens, and hopefully it doesn't. But in the UK, for example, while we have a clean regulatory framework with just a single regulator looking after conduct, the FCA, we don't have any unicorns. And there's a whole broad story for that, perhaps with the lack of access to capital, or maybe less risk taking. But um, we have a lot of fintech champions here, so I think that story maybe is a different one. Um, what we're interested in is seeing the regulatory competition now globally, with places like the UAE, particularly, where Greengage just opened an office in Abu Dhabi, attempting to put their head forward and say, look, we will work responsibly with innovative firms, but you'll actually have a place where you can know you can grow safely with a regulator that you can talk to, which for us has been very helpful.
And what's it been like? I know that you've been traveling recently and really, kind of taking your message on a world tour here. What's been some of the most exciting conversations that you've had in places outside of the, EU?
So I think uh, I mean, the UAE for us is very exciting. Obviously, Dubai and Abu Dhabi have their own merits, but we are seeing global businesses set up there at scale. We have our collaboration with Coinbase for tokenizing private credit for SMEs. That is in Abu Dhabi. So Coinbase Diamond, which is their tokenization protocol, got regulated in ADGM, the Abu Dhabi Global Markets, in the first jurisdiction globally, before even the US, which is Coinbase's home market. Um, I think places like Singapore and Hong Kong are trying their best to also be more open and dynamic. And I'm still hopeful for the UK, but the EU has carved out, as I'm sure you know, MiCA
Hmm.
as a good harmonizing framework. It's still too early for me to tell if that's going to be a pro or a con. It's quite heavy as regulation goes, and was largely set up in response to the Facebook Libra or DM project, which is now defunct. But um, uh, at least it gives a broad-based guidance, which I think some other jurisdictions are still waiting for.
Yeah, I think so. At least having a baseline understanding of where you stand, it's helpful, but it could also be hindering for a bit as well. Help me understand a little bit more about some of the other partnerships. You had just kind of alluded to that one with Coinbase, but what are some other really significant partnerships that you're working on, and where do you see these kind of being a symbiotic type of relationship, and how are, the two parties in benefiting from it?
So maybe I'm taking that theme of the Coinbase collaboration and kind of pushing it alongside that idea of the world as our balance sheet. We see the broad story of private credit to be essentially the story of a risk-off banking market leading to now over 2 trillion US dollars of non-bank lenders injecting money into the system. And there's studies that are projecting if the current rate of growth of private credit continues, that this could be over 10 trillion US dollars, some massive amounts of money coming from non-bank lenders going out as loans. Um, and as I mentioned, the killer app of stablecoins being perhaps the first, we're looking at other lenders or private lenders as our kind of go-to market. And so we're looking to sign partnerships and collaborations with balance sheet providers that are perhaps not banks, credit funds, and credit funds are looking at us to see if we can get efficiencies together to reduce the cost of capital for them to inject money to businesses. We just signed an MOU with quite a big UK credit fund in the billions that is looking to tokenize traditional SME lending with us via the Coinbase Diamond protocol. I can release details on this in due course. We haven't actually announced the name, but what we're trying to do is find multiple credit funds and other balance sheet providers that we can work with to partner, where Greengage can originate good, high quality credit from businesses that will then hopefully repay with underwriting done with partners. We're not yet underwriting ourselves, meaning we're not taking credit risk as a firm. We're too small. But I'd like to scale into that at some stage. And that kind of is a proxy to there's a few good tokenized private credit platforms out there, but they've been focused, I would say, more on the subprime end of the market. Names like Maple or Centrifuge or Goldfinch.
Yep, yep.
Some interesting firms. I'm delighted that they've proven that the tech works, which is great for us. We're aiming to punch up into a different level of companies, so maybe higher quality credit risk, and then our partners will be ideally firms that have big pockets. We see the minimum borrow for us to really add value is currently 1 to 2 million, so it's not really the S of the SME, it's the middle market. But ideally, we'll scale up to maybe the 25 to 50 million mark as we grow.
Fantastic. And you've experienced both bull and bear markets in this industry. What are some of the key lessons that you've learned about resilience and maybe some of the pros and cons about both types of markets and really how you just stay focused and effective during any of these type of market cycles?
So I have a huge amount of respect, and I've learned this. This is my first rodeo as an entrepreneur, but for firms that can survive the down in the market. We've been around now for 6 years, and it's been tough. I mean, the profits we've made when we have made profits have been largely connected to crypto-backed lending, where we've done over $300 million now of facilitation on our platform. That's a lot of risk in a market when the Bitcoin price is tanking for us to originate. So we've had to be lean, and I've also known firms that have scaled too quickly and then run out of cash. Not that we're ever out of the woods ourselves. I mean, you always have to hustle as an entrepreneur. And you know this as well. You have your own business. But what we've learned from that is if the firms can survive not just the peaks but troughs, they're good counterparties for doing business long term.
I think so too. And what are your thoughts on, just the state of, I would say, interoperability between different type of platforms, and how do you think it affects the ecosystem, and what's kind of Greengage's approach to addressing this as well?
I think I'm going to answer this in slightly an odd way. We're keen on people, as I think maybe runs slightly contrary to a lot of the pure DeFi kind of mantra of algorithmic based solutions to problems. I think we look at this more in a way, and I use the analogy of an Iron Man or Iron Woman, but we're people that can use tech to make greater outcomes.
Yeah.
And I think if we think of interoperability as a theme, people, if you're one of our clients, for example, say a business, you will want to face off against a counterparty that both can deliver products and services to you, but can also understand you and listen to you. And it's often difficult. And as a proxy, we've seen this with the aggregator websites, for example, with say buying a car insurance or buying a travel for flying overseas. You can strip down to compare apples and oranges to a certain extent, but there are always going to be apples and oranges in there. And our idea is that that friction point between the comparison of different comparable things from the perspective of a client needs a value added intermediary to help navigate those. We're not going to be able to take the same level of take rate as maybe one of the big tech firms is doing today, and I don't think we should. But if we can act as an intermediary on the side of the client and help them find an outcome, at least we found that clients are only too happy to pay for the services that they get.
I like that. Now, with so many different trends in this industry, I mean, there's DeFi, there was NFTs, that craze. We have everything that's going on right now with meme coins. How do you really separate what's worth pursuing from what's hype, and how do you evaluate kind of emerging ideas and determine their potential for true value and whether it should be something that you're implementing in your business?
So I think we're pretty lucky. We have when I said crypto-friendly accounts that are fiat, we're opening up accounts for businesses that are trying to find a stable payment rails.
Hmm.
Um, and this allows us to get to know clients from all different industries. So we get to see inside the hood of who ticks over and who can pass our KYC AML one step. That's kind of the first hurdle. But once they're in, we get to get our heads around their business model and get to know who else is in their industry, and that helps us to maybe see the wood from the trees. I'm not going to say we're ever going to have a crystal ball and we can see things better than the next guy, but we at least get to know, I say the good eggs and the bad eggs, and we try to steer clear of the bad eggs.
And what's that been like? I mean, has that been surprising for you and maybe something that you weren't expecting?
Yeah, I mean, I didn't see meme coins taking off to the extent that they have, and good luck to them. I mean, we know people that have made a fortune from them. Obviously, there's an equal amount that probably lost the same, but uh, I think we're more of the picks and shovels end of the market.
Yes.
So having a bit of innovation always gives a new generation of potential clients for us. Um, and the lending is where we actually make our margins more than the accounts. The accounts are a way for us to build relationships and provide service to people that someday we might be able to help with access to credit.
Now, are there any kind of projects or trends outside of this that is kind of capturing, your focus and exciting to you as well too?
I mean, everybody's talking about AI these days. We're we're using the large language model um, uh, uh, AI tech to a certain extent. I think uh, there's a big intersection between a lot of these mega trends in tech and the broad theme of what I tried to outline of the Iron Man or Iron Woman is where we see our value add. So if we can help work with um, the emerging trends and help our clients to navigate them and also get value from them, that's what I think is sustainable for us. How that translates into day to day, we're kind of we're not going to be huge tech innovators ourselves. We're working with partners ideally to get that. But our value add is more in the stitching of following trends, finding what works. This is classic private credit or private client service.
And one of the things too, I'm kind of curious about this, and I would love to get your insight on it. But being a leader in this space, what are some qualities that you think are going to be really kind of indispensable for future leaders? And what are some other skills that maybe future leaders that are trying to get into blockchain should cultivate to really kind of thrive in this rapidly evolving space?
I I can't say I have the magic formula from future leaders, but I mean in my own efforts, and we're not yet the unicorn that I kind of am chronicling, but we're trying. Um, I think first is to have curiosity. So obviously every day there's some new thing, as you said, and it moves so quickly. So we need to keep ourselves abreast of not just current affairs, but kind of current tech affairs. And there's some great publications that help us just to keep online. I think in addition to curiosity, um, the capacity to listen is a big one. We're coming from a traditional banking world, which is more about, and I mentioned this already, but more about um, trying to push, and we're more about the pull. So getting our heads around what clients actually want. Um, I don't think we're going to be able to afford just shouting from the rooftops and pushing product into clients' laps. I think we need to actually get our heads around what a client wants and what they would benefit from. And that's what I think our sustainable competitive advantage comes from.
Fantastic. Now we are about the halfway point here. It's amazing how fast the conversation goes by. And I would like to open it up to some questions in the audience here. We do have a very intimate setting today. So, anyone that does have a question, let's kind of keep it to this conversation here. And let's bring up, I believe this is Miracle. So, 1 second. All right. What's your question for us today, Miracle? You're on mute if you're here. All right. You may have some issues with your mic there, but we'll keep you up in case you figure it out and we'll let you ask that question. But really wanted to shift it a little bit more, Sean, to some of the things that you're currently working on and help us understand.
GM, everybody.
Oh, you're here. 1 second. Yep, you're still on mute. What's your question?
Yeah, hello everyone. Hello Trevor. Hello Sin. I just came up now and I met this space while going through my LinkedIn. I would like to know more about it. I saw just Shilling and it caught my attention because I'm a Web3 enthusiast and I'm basically a community manager and builder. I'm a moderator and I do AMA and space host also. I'm more focused on community building and community engagement. So I felt like I could do it us and if there's any project around, maybe I can talk to them. But basically, I'm happy being here with great minds like you all.
I love that. I love that. So he's looking for opportunities, and maybe Sean, this could be a good transition to, where you currently are right now, with your organization, right? Like, are you looking for to bring people on board? If there are people that are looking to contribute in some way, how can people get involved, and where's the best place for them to figure out, what's going on when it comes to hiring, or just really cool, interesting things that you're working on as well?
Right. So I think there's us specifically, and then there's maybe to Miracle's question as well, the broader trends. And I gather Miracle's a digital marketing specialist, if I got that correctly. Forgive me if I haven't. With us, our jobs are posted on the website. We're hoping to do a Series A next year, and that would give us access to hire. I'm looking at increasing our sales team, for example, more client-facing functions, our tech. In a broader sense of maybe the interest of where you go to learn about not just the industry but other positions. There's some great publications. I think what you're doing, Trevor, is amazing to just build up a database and an address book of people that I'm sure you know personally, but who are innovators and looking to move the needle. Um, and in terms of marketing, I would think either individual firms or the publications would be the best point of call, and see where the likes of Coin Market Cap, if you're looking to go directly into crypto, has highlighted the biggest projects, or maybe you want a smaller one, and that'll be a good ranking of if you're looking for crypto native stuff. Otherwise, firms like us, as I call us, the picks and shovels, you could find in various lists of in our industry, crypto-friendly banking providers, for example, or lenders, um, uh, or other functions. I mean, blockchain is great in that it's addressing nearly every area of finance, but more broadly, not just finance, uh, healthcare. There's interesting projects, advertising, the same, etc. So to do a macro fit and then drill down to where you'd like to work.
Yeah. It's interesting as well too, right? When it comes to digital marketing, community managers, social media, a lot of those individuals, specifically kind of in crypto and blockchain, I think that, there's a really good opportunity, quite frankly, to maybe, work with some of the projects that are maybe not so top of mind for most people. Like you mentioned, supply chain, there's healthcare, there's so many different areas where blockchain is being utilized, but majority of the people only kind of really focus on, like, the top 50 projects by market cap, and I think that there's an opportunity out there if you're looking to, really be different when it comes to marketing and that to start to kind of go down this path and try to partner with companies like Sean's here. So thank you for your insight there, Sean. Another question that I have is Scott, and Scott is here. If you're here, what's your question, Scott?
Um, well, I'm more of a spatial computing guy, and I build. I guess you called me a metaverse builder. I'm just wondering, how do you see like going forward the actual integration of assets, of IP, and all of that working hand in hand with finance? I've kind of I've seen it where it just feels very separate, and it's been very hard for people to translate value of whether it be digital artwork, anything that has an IP related to it, and transferring that value to crypto and having it be meaningful and be a real asset.
Super interesting question. And we've been thinking about this as a firm. The the metaverse was something we actually had a prototype branch in to engage with clients. So there was a friend of mine who built um, interesting a family office focused metaverse that we were looking to have people drop in as we don't have we have one physical office that is client facing today in London, but we thought that these kinds of digital mediums could be a way for people to engage with us at scale, and that we would have real people kind of with avatars talking with them then as if it were a physical branch. That hasn't gone live yet, but it was a kind of our getting our heads around it. I think your question is more as to how do these how does the intellectual property, how does the goodwill space translate then as these technologies emerge into potential collateral for banking activities, lending primarily?
Right.
And I think that's early days. If we look at art specifically, there is an art lending market for the physical stuff, but it's not great either. There's a lot of questions around the validity of art pieces. If you have a loan against a Caravaggio that's been shown not to be a real Caravaggio, you're kind of stuffed as the lender because you've used
Right.
that piece of collateral as a as your safety net. Digital art or digital intellectual property is no different. If there's a market for it, if there's liquidity for it, and people want to buy and sell, it can be used for lending activities. And we've seen that interestingly with in our space, the ape projects. People can use ape. We've been able to facilitate with family office partners, at least in theory, loans against ape coins because there's a market for them. And I think if there's a market for something where people want to buy and sell it, people will always find a way to create a loan against it.
Okay. It's just interesting to me because I saw such a poor usage of the assets while I was in the mix of what you would call the NFT crypto world. Like I said, I'm a spatial computing guy. I'm actually building a network that's based off of all cash payments right now, and it is all spatial computing, augmented reality, geolocation, XR, all three kind of bound up into one PDF book that you basically own the book. It's your network, and to sell your digital assets, you basically sell the experience by the PDF link page with a crypto link that's encrypted. It's just it's my own idea. It's not something that's mainstream within the crypto or NFT networks. I don't see eye to eye with a lot of that world. I just didn't see a lot of practical scaling. That's where I'm at. I'm interested in the crypto world, but I just want to see responsible scaling and intelligent use of the assets. That's where I'm at.
It sounds like an interesting project, and happy to discuss more if we can help, maybe offline.
Yeah, that'd be great. Because I mean, if nothing else, another set of eyes. Because I mean, I have no funding whatsoever. This is beyond bootstrap. There's not even bootstrapping it too. So it's just an idea of somebody who's talented in what they do and has the access to the platform space that I need to do it.
Love that. Thank you, Sean. Thank you, Scott, for coming up with that great question. And I do also encourage everyone. I always do during these episodes, but everyone that's listening, I encourage you to connect and to have conversations offline. Right, this is a starting point for it, and there are so many of us. There's a lot to be your attention to be driven to, but we all came here for a common reason. So let's make sure that we're connecting with folks here and having these conversations, continuing the conversations. So next question is Magadas. You are here with us. What's your question? And hopefully I did not mispronounce your name.
Hello everyone, my name is Mukhaddar, and my question is from
I can barely hear you. Your mic is really, really low.
yeah. Hi, hello everyone. Can you hear me?
A little bit.
Okay, then my question is from you. I am a digital marketer and branding specialist. I'm not getting clients, so can you guide me and what? How can I get my clients? Thank you.
So I had a hard time hearing you there, but I think that the question was kind of geared more towards how you can get more noticeable in this space, correct? So what are some of your ideas on that, Sean? Just being more marketable.
I mean, something we've tried to do is carve out a niche for value added thought leadership. So if you have a skill or specialty that it is something that others don't have, ideally you could write about it and post it, and that will create an interest in what you have uniquely to offer. I think also uh, what we've tried to do with the likes of Coinbase as a collaboration partner is to find firms that are doing interesting things and work with them, because obviously our brand is still small. We're a small company. Um, Interestingly, if you Google digital merchant banking, which is one of the old taglines we used, we're still the top hit globally on Google for that without spending anything, which is kind of something we're proud of to a certain extent. But I think co-branding with the great and the good, working with the likes of Trevor, and Trevor, I'm always grateful to speak, but this opportunity is one of these things that just you've, I'm sure, been able to build an interesting group of people that have been guests, and the likes of podcasts and dialogue uh, work by just connecting not just individuals, but those links on a broader sense. So we're always keen to speak with interesting people.
Yeah, it's a blessing. I'm so fortunate. You are Today is episode 61, which is crazy. It's been over a year of doing this, and I'm able to learn just as much from the incredible guest as our audience is, and hopefully being able to share our insights and help people that are looking to get into this space, because like everyone else that's trying to make that transition at one point in time, we were just like you, right? So if we're able to do it, we're not some kind of special human beings. We just want to find what's passionate for you and what you want to wake up doing every day and try to apply that. And I think that connecting and genuinely being authentic when you're trying to reach out and have these kind of collaborations, I think that goes a long way. So wrapping it up here, Sean, this has been very insightful. I want to kind of shift it to some more kind of fun things that are going on. So for those that may not have been able to travel abroad or to go to London, tell us kind of a little bit about like what's the crypto scene like there, and what are what's like networking like, and is there any other cool things that are just kind of going on that people outside may not know about?
So I mean, London's a lot of fun generally. It's got a great scene for culture and the arts. In the crypto space, particularly, there's a great community. We love the likes of CoinScrum, who I have recently on my own podcast. Not as many episodes as you, Trevor, but CoinScrum is one of the oldest Bitcoin specific communities I think in the world. And it's still grassroots, so that there's people that meet. There was UK Bitcoin Week a couple of weeks ago, and it was a lot of the same characters that I remember seeing years ago, who are in some cases quite wealthy given Bitcoin's rise, but they're still coming out for pizza and beer. In addition to CoinScrum in London, there's the Digital Commonwealth, which is run by James Bowater, who's kind of a larger than life character, and he brings together people again all walks of life. And there's several. So if there's anybody coming to London for the first time and they're interested in crypto, it's generally it's a small enough community. We know each other, but it's been going around for a while, so people are generally still open and friendly.
I love that. I love that. And you mentioned that you've been able to obviously travel different places. What's your most exciting place that you traveled to and why?
I mean, in the crypto space, I have to say it's the UAE. There's just great energy there, and they're doing stuff. It's why we open up the office. We like the tone of innovation, and there's money. People are actually giving money to companies looking to scale, which is great. I'll always have a soft spot for Switzerland, but that's where I used to live. And Crypto Valley in Zug is perhaps a little bit less adventurous, but there's again a lot of great stuff happening with companies doing interesting things.
Yeah, there's so much going on in Switzerland. I really gotta get out there. I've been talking to people. I've had several people from podcasts on, but I gotta visit for sure. And you had mentioned, Sean, that you're also doing a podcast. So is there anything else that you're up to that people might not know about, or anything else that like you're following or just interested in that may not be easily known by checking out your LinkedIn profile?
I think the art stuff. I like the metaverse question because we tried to make that a little bit more of a push, but it's not ready yet. Hopefully it'll go live in due course. But we're having a bit of fun with. I had two guests on my podcast, more in the arts and media space. The podcast is called The Gauge, Gage. One of whom was with Formula One, and he was played by Orlando Bloom in the Gran Turismo film. So it was
Wow.
pretty cool. And just thinking about how Web3 interacts with the media space is a lot of fun.
I like that. I like that. And let's close it out here on the fun part of our segment. We're going to do a little bearish or bullish. So I'm going to throw out a couple of topics out there, and you can tell me if you are bearish or bullish on it. So let's do first. Hmm. Something that most folks aren't talking about these days, and I don't know why the conversation has kind of gone deaf, if you will, but central bank digital currency. What are your thoughts on that? Bearish or bullish?
This is a complicated one. And again, I don't have a crystal ball, but I think I'm more bullish on stablecoins than I am on CBDCs.
All right, I like it. I like it. And let's see here, just overall adoption of this technology when it maybe just let's just say it's crypto blockchain all encompassing and more mass adoption. Are you bearish or bullish on that?
I mean, I think I have to say bullish. I'm in the space, but I think particularly the next generation, and we're seeing this with businesses, the younger owners and younger um, people are much more au fait with digital, and they're less risk averse.
Yeah. And then lastly, I would say bearish or bullish on um, just overall kind of Bitcoin and institutional adoption.
I mean, I have to say this again, but look at Bitcoin price where it is today. I think it's the highest it's ever been. It's not always just going to go up; it'll go back down. But I'm fascinated to see that it's less volatile almost than some of the big tech companies in terms of the share price performance. So I think it has been, and I think it happens once in a generation, the arrival of a new asset class, and I think that plays a role. For me, it's kind of it's not just a whiff of freedom in this kind of libertarian sense of the word. It's a call, almost as a pinprick to the traditional banking system as a way for a store of value that is defensive against inflation. And I think there's a lot of debt in the world, and people are looking for how to defend themselves against that. And I think diversification is always a good thing, and crypto has benefited from that diversification. So I think I can't say bullish to everything, so forgive me, but I'm positive on the broader asset class.
I love that. Well, that is a fantastic way to end it. Thank you so much for taking the time to join us today. I know it's a holiday in the States here, folks, so this has been a very intimate conversation, a very much a conversation that's definitely needed to be had. And I thank you for joining us, Sean, and sharing your insights. And I'd like to thank our guest that out of all the things you could have been doing, you chose to be here with us today. So Jessica James, Cadero, Miracle Ross, Prantaba, Marina, Uven, Adam, Carolina, Claire, Mohammed. I know that there's some others that are here as well too, folks. Thank you so much. I really appreciate all of you and look forward to joining you again this Friday for another conversation with us on Just Shilling. Take care. Be safe, everyone. Have a great day. Bye.